Hi, this is Dr.D.Kiruthika, Department of Commerce CA, Dr. S.N.S. Rajalakshmi College of Arts and Science. A warm welcome to my YouTube channel, Learn to Win. Today we are going to discuss about the topic of auditing. I hope you know very well about the term of your audit. The audit is nothing but the examination or inspection of various books of accounts by an auditor, followed by the physical checking of inventory to make sure that all the departments are following documented system of recording transactions. If it is done to ascertain the accuracy of the financial statements provided by the organization. So, what is the origin of your auditors? The term audit is derived from the Latin word audire, which means to hear. In old days, whenever the proprietor suspected a fraud or error, certain people were appointed to hear the verbal evidence of the transaction. So now I think you have a very clear picture of what is the meaning of the audit as well as the origin of audit. Let us explain again with your meaning of audit with the different terms. So it is an official inspection of an organization accounts typically by an independent body. Audits can't be expected to detect every fraud. So that we have to make a highlight. Audits cannot be expected to detect every fraud. Conduct an official financial inspection of a company or its accounts which is maintained by them. An unbiased examination and evaluation of the financial statements of an organization. It can be done internally by the employees of the organization or externally by an outside firm. Again, coming back, this is the definition of the audit. So let us check with the main definition of the audit, which is given by the ISA, that is International Standard of Auditing. An audit is the independent examination of the financial statement or related information of an entity, whether profit oriented or not, and irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereon. What are the features of the auditing? The audit is a systematic and scientific examination of the books of accounts of a business, and again the audit is an undertaken by an independent person or body of persons who are duly qualified for the job, and the audit is a verification of the results shown by the profit and loss account and the state of affairs as shown by the balance sheet. The audit is a critical view of the system of accounting and internal control. And again, the audit is done with the help of vouchers, documents, information and explanations received from the authorities. Only when the authorities is giving the documents and the vouchers, that will be audited by the auditor. The auditor has to satisfy himself with the authenticity of the financial statements and report that they have exhibit a true value and fair view of the statement of affairs of the concern. And the auditor has to inspect, compare, check, review, scrutinize the vouchers supporting the transactions and examine the correspondence, minute books of the shareholders, directors, memorandum of association and articles of association, etc. in order to establish the correctness of the books of the accounts. So from this you can understand what are the various features of the auditing. And coming back again, between the difference between the accounting and the auditing, many of the members have a confusion between the term of your accounting and auditing. So the accounting is a continuous process carried out during the accounting year, but the auditing is a one-time activity after the closure of throughout the year. And there is no prescribed qualification is required for the accountant, but the auditor, he must be the member of the institute to be an chartered accountant to become an auditor. An accountant is an employee of the company. An auditor is an independent professional. An accountant gets regular salary for his work. He gets remuneration for his professional audit. Here comes the basic objectives of the auditing. The main primary objective of any auditing is to verify whether the account exhibits the true and fair view of the business. That's why we have given here the primary objective as to respect to the owners of his business, expressing his opinion whether the account exhibits the true and fair view of the state of affairs of the business. And it has to be remembered that in case of the company, he reports to the shareholders who are the owners of the company and not to the directors. Okay. The auditor is also concerned with verifying how far the accounting system is successful in correctly recording the transactions. And he had to see whether accounts are prepared in accordance with the recognized accounting policies and practices and as per the statutory requirements. Yeah, the secondary objective is the deduction and prevention of the errors. So the errors or the mistakes committed unintentionally because of the ignorance and carelessness. So we have to deduct that particular errors and we have to prevent those errors in the futures. Okay, the errors, it may be of the following types. One is the error of omission and one is the error of your commission. I think as you all know what is the basic difference between the error of omission and error of your commission. See, your error of omission, these errors which arise on account of the transactions into being recorded in the books of accounts either wholly or partially. That is, it can be totally omitted and it will not affect the trial balance. So it has to be more difficult to deduct that particular error. On the other hand, you have the partial omission also. That is, the trial balance will not agree and it can be easily deducted. And the next one is your error of your commission when incorrect entries are made in the books of the accounts either partially or wholly. Such errors are known as the error of your commission. I have given an example for that. Wrong entries, wrong calculations, posting carry forwards, etc. are the errors that can be located while verifying. And the next one is your compensating errors. That is, two or more mistakes may be done and it may counterbalance each other. That is example I have given you. Wrongly debited rupees 100 and less and wrongly credited rupees 100. Then such mistakes will compensate each other. That is known as your compensating error. Okay. And the next one is your error of principle. These are the errors committed by not properly following the accounting principles. That is that due to the lack of knowledge of the accounting. Example, revenue expenditure may be treated as your capital expenditure. Okay, this errors can be prevented only in the future. And then next one is your clerical errors is the one which arises on account of the ignorance, carelessness, negligence, etc. Thank you so much for listening to my lecture. Thank you once again. Kindly keep in touch. Kindly subscribe to my channel, Learn to Win. Thank you.